All right. Hey, everybody. How is everybody doing today? Eric and I wanted to introduce you guys to somebody that we have created a relationship with. His name is Corey. He is one of the owners of Fundwise Capital. They are an amazing company, been around for a long time, helped a lot of entrepreneurs and business owners. And we are in the process right now of going through funding ourselves with them and are excited to seen a lot of great things happening in the back end and looking to get some good funding, but wanted to introduce you to him. And we really appreciate your time and taking the time to come and talk to us.
Awesome. Thanks, Anton. Thanks, Eric. Good to be here. So I'll just go through our funding process and what that's like. But we are entrepreneurs at heart. So we've started a few businesses as well. Between my partner and I, we've actually created 7 businesses in the last 6 years. So we're kind of on a roll with about one a year. We're good at starting them and growing them really fast. And then we like to do another one and another one. So we really enjoy talking to entrepreneurs. We've spoken with, on average, it's a few thousand business owners a year with our company that we're helping to get financing. And so we know what it's like to start a business, how hard it can be to find funding, and what funding products there are out there. We're a product of our own product. When we first started our funding company, we knew there was a need in the market for startups to not go to their rich uncle or hope for VC funding. And so we had to get funding from ourselves to have an office, to have employees, to pay our own personal bills, to generate revenue, to generate ads. And that's how we started. I went through funding in our own program. I got $64,000, used that for Google ads and to start a referral partner program and to pay for our office. And that's what got us off the ground. So we have gone through our own funding to start our own company, and our mission has been to help other entrepreneurs and startups to get off the ground as well with whatever project that they have. And you don't have to be a business, well, you don't have to have a business, or even if you registered a business yesterday, you can still get financing. So we have a few different products, and to make it really easy, all you do is click on the link that Anton and Eric have and fill out a 60-second form. It's super easy. You don't even have to share your social security number. All we do is get your basic contact info, date of birth, and address, and we're able to get a credit report from Experian. So there's no impact to your credit to do that. It's a soft pull, and we're able to see what kind of funding options that you have. And we are a marketplace for funding options. So it's not only startups that we work with, but also business owners, small business owners that have been around for, could be 20, 30 years. So typically from someone that doesn't even have a business yet, that just wants to start a side hustle, to a small business owner doing about $2 to $3 million a year in revenue. That's our market right there. And so if you have decent credit, good credit history, then you've got options. We have different products that, depending on what you need, fit what you're looking for. We have 0% interest credit cards, no upfront fees, to business term loans. If you do have a business, we even have a loan program with terms that go out to 10 years with very competitive interest rates as well. So we're not out there to get you the expensive, very short-term merchant cash advance type loans just to make extra money in commissions. We're here to find you the best funding that you can possibly qualify for. So applying on our website, it takes 60 seconds to get started. So like I mentioned before, Anton and Eric will share that link with you, and you'll apply, and we look at the funding options that you have, and if you qualify, then we're able to reach out to you by phone, go over those options over the phone with you. It's a very personalized touch. It's not just applying on a website and then just hearing back through automated emails if you're approved or not. We actually get on the phone with you and walk you through the process. So that's how you get started and get going. If you guys have any questions for me that your listeners and viewers would be interested in hearing about, then we can open that up for some Q&A.
Yeah.
So So Corey, then like say somebody comes to us and they don't have the best credit and they're looking, and they, what options do they have if they're not ready to roll today with financing?
Yep. I'll quickly go through the three main loan programs that we have. So for startups that don't have business revenue yet, we're looking at 650 or higher credit score. You don't need to show business revenue. It's stated income. So it's a really flexible funding program, 650 or higher credit score with good credit history. If you do have business revenue of $15,000 a month on average, then you're looking at 600 or higher credit score with $15,000 a month going to a business bank account. There's some additional options there for business term loans. If you have a 700 or higher credit score with $100,000 a year in personal income, we have an incredible program that goes out to 10 years financing and up to $250,000. So that's where you sit as far as the credit goes. And if you don't have good credit,
quick on that term loan you were talking about, the 700 with the 100,000, is that did we hear that you could do that as a couple too if you're married? Is that a between two or is it per person?
Actually, yeah. Thanks for bringing that up. So it can be household income. So if there's a spouse that also is working and has some revenue, they can both be on the application, and the income between both of them combined can help them to get qualified. So we've seen that quite often where they don't quite qualify, just maybe the husband or the wife on their own, but together that they do qualify. So that'll help a little bit as well. When a startup comes through and applies for funding, if they have credit cards that are maxed out, if they're above 30% utilization, which does happen often, we have a couple extra options to help you qualify. So you wouldn't qualify right off the bat, so right out of the gate. We would work on getting you a personal term loan to pay down those maxed out credit cards, or even getting you a bridge loan from private investors that pay your maxed out cards down to that 30% utilization. So just a little word on utilization if you're not sure what that is. If you have a credit card that's got a $10,000 limit and your balance is $3,000, that's 30% utilization. So it's the percentage that you've used, the balance that you've used compared to your limit. So we need to get you down to 30% utilization to get you qualified there. If your credit is kind of suffering, if you've got any recent late payments, there's a charge off on your credit, maybe there's a bankruptcy a few years ago, then there's also a credit repair option as well. Very affordable credit repair option, very effective. Will take maybe 3 or 4, 5 months, depending on what you need fixed on your credit. But Anton and Eric also have a link for that you can go through. It's a sister company of ours. So you can go through and get your credits only $79 a month. So very affordable, but we want to get your credit fixed so that you can come back to us. Also, if you're in a hurry, which most people are needing money yesterday, you can have what we call a credit partner apply for financing as well. So if you have a business partner or a spouse that has better credit than you, they can go through the financing process to get that funding that you need.
Wow, that's awesome. I didn't realize you guys did the bridge loans and everything too. That's pretty cool. What's the typical timeline for somebody to get financing?
If they're qualified right away, 7 to 10 days. If they need a little bit of work, then it can add on a couple weeks onto that. So on average, we're looking at right around 3 weeks, just depending on their credit situation.
That's awesome.
Yeah, Ken, is that what you were talking about when he was mentioning that you could have a business partner go through the loan? Because, we were talking about kind of teaming up with Ken and, getting a loan. Is that what you were referring to, Ken?
Yes, that's correct. So
yeah.
That's exactly correct. A bridge loan or having additional credibility available for purchase. So in other words, or purchase power. Sorry, that sounded backwards there.
Yeah.
Just having someone with more purchase power to be able to apply to the loan. So yeah, absolutely. So bridge loan can be used several different ways. It can be used on the applicant side, so to have greater credibility. It can also be used after the loan is paid out or before the loan is paid out to help carry over, hence the term bridge, help carry over funding before the loan is approved. So, or
Got
after
it.
the loan. is approved. So the beauty about the bridge loan is it can be applied different ways. That's correct.
Yeah, and the way that we typically use the bridge loan, or we also call it gap funding, is to pay down those overutilized cards so that the client that they didn't qualify before because of the maxed out cards will then qualify, paying those balances down. And then they do have to wait for a little bit for their credit report to update with the bureaus. Those balances have to update that have been paid down. So then they'll qualify after that updates with the credit bureaus, and then they can go through funding. They pay back the bridge loan as they go through the funding process, and then they're good to go. And of course, it's got to make sense. They've got to get enough funding to be able to pay that bridge loan back, and then have enough money for whatever they need the money for as well.
Yeah, yeah. Have you noticed that of the credit repair, the credit bureaus, that usually TransUnion is the fastest to approve or to get theirs, in check, where Experian and Equifax kind of fall behind a little bit? Which bureaus do you typically go off of, or do you do an average of all of them?
We do all three.
All
Because we
three.
want to make sure that if there's something hiding on another bureau, we typically look at Experian. That's the main one. That's the biggest one. But if there's something on another bureau, we need to know about it as we're going through the funding process. So originally, all we do is get an Experian credit report. It's really easy for us to do that. But as someone goes through the funding process, if they're getting a bridge loan, we need to make sure that we see everything that's there to make sure that they qualify for that funding.
Perfect.
Could you
Awesome.
hit on, like, a lot of our clients right now, they've gone through and gotten like 0% business credit financing through different partners. And I know you guys do that too, but going into like this term loan, if somebody had, good credit income and they qualified for this term loan and they were able to do something over a longer period of time, even though there's interest there, like, could you maybe hit on what the benefits of that would be, maybe, or why that would be preferable maybe to doing credit, or what's your thoughts are on that, or maybe, and maybe even just touch on that loan a little bit more on how that could work with our clients that are coming in and potentially wanted to buy like a truck with us and then use certain types of financing to make that a reality for them. I guess to get that truck on the road. And
Long-term
That makes
term
sense.
loans are nice because the interest is it's low. It's around 7% interest, and it's really competitive. But we also mix and match. So if a client comes through and qualifies for 0% interest credit cards and that long-term loan, most entrepreneurs need more money than they think they will, or their project, they need more money than what they qualify for. So we try to get them as much as we can get for them. What's nice about the credit lines is you only pay for what you actually use. The term loan is nice because then that loan is paid off at that term, and you don't have those credit lines just kind of hanging there with balances on there. And eventually, after that 0% interest period wears off, then it's going to get more expensive with the interest. I mean, it's going to go to regular rates at like 18 to 20% interest rates. And then the monthly payments are really low. So it's great for startups. You want to keep your payments as low as possible so that you can bring in that revenue and have that margin for profits, and to be able to pay that off when you get into a healthy spot. But we've also seen clients come through, they get the 0% interest credit cards originally, and then 6 to 8 months later, after they've been able to grow their business and get that revenue coming through, they come back for a business term loan and pay off those 0% interest credit cards. And then those term loans, they disappear after that term. And so then they're in a really good spot, and their credit's going to be higher than it was before. Just a little bit of advice: don't ever cancel your 0% interest credit cards, because it's going to make your credit look really good if you've got very low balances and a lot of available credit, or no balances and a lot of available credit. And also another tip: when you do get credit cards right off the bat, if you get some business credit cards compared to personal credit cards, max out those business credit cards first, because that will not affect your credit. Maxing out your personal credit cards will affect your credit, and it can drop in a hurry. If you're overutilized, you've got some maxed out cards, when you get over 30%, your credit score will start to drop. If you're maxed out, it'll drop 100 points in just a month. So The good news is as soon as you pay those cards back down, your score is going to jump up pretty quick as well.
Nice.
Awesome.
Yeah, I noticed that. Good stuff, man. Good stuff.
Yeah.
Excellent.
Cool.
All right.
Yeah, hopefully
I
that's
guess,
exciting to entrepreneurs out there. Finance may not be the most exciting thing, but what is exciting is having money to be able to
Do
invest in an exciting
Yeah.
opportunity.
Yeah.
Yeah.
I mean, that's like, like Eric said, 3 to 5 calls a day. I mean, just everybody needs money. And even if they have money, there's no reason why you shouldn't do this anyways,
Right. Yeah.
Yeah.
If it's a proven model, which you guys have, and that return, just makes sense, then go for it. I think
Yeah.
we'll get a little bit gun shy and nervous about, getting into debt, but if it's going to bring a bigger return, it can change lives.
Yep. Absolutely. Absolutely. You got to add that into the video, Eric, could you?
Yeah, for sure.
Yeah.
Yeah. That's all awesome, man. I think this is pretty cool. I mean, to be able to have that option of, I like that you guys do everything. I mean, because where we're sending people before is like either they're doing 0% or we had another partner, where they're going and just doing loans, or whatever, and but didn't seem like the best types of loans either. Like a lot of them weren't that great, and but that you guys have all the options and look at it kind of as a whole picture and see what's best for them, or get them the max on everything, which is pretty awesome. And we could talk about maybe about the fees too, I guess, on what you guys, because I know there is no charge up front. So like what happens if somebody comes in and they get some 0% credit and they get a loan, whatever, what's this going to end up costing somebody on the back end?
Yeah, so there's a fee on the back end for our services to get money for our clients, and that's how we live and put food on the table. So there's a 9% performance fee. So if someone gets a $50,000 0% interest credit cards financing, then we just charge 9% out of what they get. So that would be $4,500 out of that 50,000, and then that's it. Then there's different fees for different types of loans that we have. On the business term loans and the long term, we call it professional financing. That loan where you have to have 700 credit and $100,000 a month. Those there's no performance fee. It's origination out of the loan. So there's not any kind of like extra fees that we take out of the back end or anything like that.
Got it. So if you get 50,000, you still get 50,000, but maybe does it come off the interest? Does the fees come off of the back end somewhere?
Comes out of the back end. So if someone got 50,000, they'd pay that 4,500, and so then they would be down that 4,500 from the.
Oh, I see what you're saying. Yep, got it. Can you talk a little bit about being a referral partner for you guys, and how someone that knows business owners and knows people that are looking for funding for their opportunities, how they can make money by referring people?
Yeah, sure. That's kind of my favorite thing. So we have a whole course and training, and we've had a lot of referral partners come. That's actually how we get our leads, is through our referral partners. So our referral partners, we have a 2-tier system. So let's say, for starters, let's say that you sign up as a referral partner, you get a landing page link and a partner CRM, just a basic, easy to use dashboard. And you share your link with maybe you have an email database, or you're doing Facebook Lives, or you just know a few people, you share your link with them, and we do everything else. So you don't have to collect any docs. You don't even have to talk to those people if you don't want to. We do everything. And if you know someone else that works with a lot of entrepreneurs, then you can actually get override commissions. So 2-tier affiliate system. So as a referral partner, you can refer other referral partners as well. And that's been an exciting thing. We had a referral partner that he connected us to one coaching company just one time. That was the only referral that he ever did, but it was a decent sized company, and we did a lot of business. And he made over $1 million that we paid him in affiliate commissions. So it's, there's some good connections out there. Coaching companies, B2B companies, um, influencers, Facebook,
automation companies.
definitely AI. That's changing the world. Big fans of AI. I've gone down deep into the rabbit hole on that one. Every night till 1 o'clock in the morning, binging on AI tools and YouTube videos about AI. So yeah, there's a lot of cool stuff coming out. I mean, like, don't get me started on the AI. I mean, there's tools out there that you can connect to LinkedIn and it'll send out thousands of personalized emails automatically to potential referral partners. So there's some cool stuff going on right now, or you could get a lot of referral partners and make a lot of overrides in commissions from their deals.
That's awesome. Yeah, we're excited about it. Obviously, Eric and I are signed up in the referral program. If you guys do have any questions about that, we're happy to talk to you and connect you with Corey. But we wanted to bring this to our people and our friends and our family. And this is a great opportunity for, we're excited about it, and a great opportunity for you guys to change your lives with Fundwise, for sure.